We're so delighted to have all of you guys join us today. We have a dynamic panel prepared for you today. I've known both of these ladies for a few years and seen them in action, whether it's helping with financial questions or Cindy with employment law questions. To start off a little bit about me, I'm the founder and chief experience officer for Innovate Marketing Group. We're an award-winning events agency that provides full service for events and activation for top brands. And we happen to be champion for small business and leadership development as well. Some of our clients include TikTok, East West Bank, and Honda. I think more than anything today, I'm here speaking to you all also as a small business owner. And I felt very fortunate because I have a strong network. I have Sherry and Cindy who I go to for all my advice. And what I realized when I'm, out there is that I realized a lot of other small business owners or entrepreneurs do not have those resources. So we really put this together for you guys, so that you guys have an outlet. You could tap into these experts during this COVID-19. So many new situations came up during this time. I know even for myself, right? So, asking Cindy, like, can we take temperatures of employees when they come back to work? And I'm waiting for her nod or shake her head, right? And then with Sherry, it's like, okay, there's like EIDL, there's PPP, there's tax credit, there's, government support. Like there's so many options out there. What do I do? And then also for the rest of 2020, what does that look like in terms of my tax for my company? And what is the most strategic? So the purpose of today is that we are going to tap into Sherry and Cindy's expertise to help you guys plan better for 2020 and help you guys answer any questions. We're thrilled to have Cindy and Sherry take the time out of their busy schedule to join us today. Both of them are extremely busy right now because of the state of COVID-19. And we will go ahead and kick off the conversation right now. We'll also end with a Q&A at the end. So feel free to, we want to use the Q&A function on this Zoom call. So feel free to tap in your questions and we'll hopefully get to all of them. All right, we'll go ahead and get started. First off, we have Cindy, who's our amazing employment law. You'll see her here. She's actually the founder and managing partner of Hackler, Flynn and Associates, a Southern California, based employment defense law firm. Since starting her practice, she has grown her firm to 6 associates and 4 support staff. The law firms focus on employment law, where their missions protect and defend entrepreneurs and business owners. She's also a part of numerous groups such as Provisors, Entrepreneur Organization. She was also used to be part of the NABO OC. She's very dynamic, and we're so glad to have her here today.
Thank you so much, Amanda. It's so good to be here.
Great. I know a lot of people have been asking you questions, and you've been on so many Zoom calls. You're probably Zoomed out by now.
Yes.
I would like to kick off the conversation with, as an employer, what are some top 3 things that we should keep in mind during this time?
So one of the things we're seeing business owners do unintentionally that I really want people to keep in mind is that they are actually age discriminating against their employees. For instance, we have several clients who, have 100, 200 employees, and they've so innocently told their employees who are over 60 to not come into work, because they were nervous about their health and they don't want to get them sick. And by doing that, they are actually asking for an employment lawsuit for age discrimination. And so I think one of the biggest things we need to keep in mind is to, treat all employees equally during this time and not target certain individuals, because I think we're going to see a rise in employment lawsuits over the next 6 to 12 months. And then, Amanda, just a couple other things I think businesses should keep in mind when they have employees specifically working from home. One is to have your employees be reimbursed for internet usage and cell phone usage. I know, Amanda, you and I talked about that not too long ago, right? But just because an employee already has a cell phone or already has internet at home doesn't mean the business can take a windfall and pass on operating expenses to its employees. So make sure you are reimbursing your employees for their cell phone and their internet. And it doesn't have to be a specific amount, but it does need to be just that reasonable number that you come up with. And then just one other thing that I really want businesses to keep in mind as we move forward, again, for your remote employees, is to keep track of breaks and lunches while they're working from home. I know, Amanda, you've heard me probably preach all too often about how important it is for your non-exempt employees to keep track of breaks and lunches, right? Clock in and clock out. And you need to have them continue to do that when they work from home. So that's kind of some of the things that I'm asking my clients to keep in mind, and telling others to keep that in mind as we move forward in this.
Thank you. And that's definitely, what you share is definitely come up a lot within our own entrepreneur group, and a lot of business owners I know as well. So we have implemented that here at IMG. So for any of the IMG staff that are tuning in, they're probably nodding their heads. But also, I just thought it was something very thoughtful for the company to do for the employees, right? Because they're now have to transition to work remotely. But for business owners out there, you're hearing this firsthand from Cindy, right? Employment law. So let's prevent this and not get sued. So let's make sure we do this right. Great. What are some other best practices for employers that you think we should keep in mind, Cindy?
So if you are going to have to furlough anyone or reduce their salary, I just read an article yesterday where all the big firms, all the big law firms are basically giving 15 to 25% pay cuts across the board. And so I can only imagine what other businesses are having to do during this time in order to save some money. So one of the things that I think is a best practice for your staff, if you're having to furlough them and reduce their hours or reduce their salary, is to keep in mind that if they fall below that minimum salary threshold in California, you're going to want to convert them to an hourly employee. And so, Amanda, what I mean by that is if you have an employee, let's say, who's making $90,000 a year and the work just is not there anymore, and you cut them in half, so you go from 40 hours a week to 20 hours a week, and then you cut their salary in half as well, from 90,000 to 45,000. Well, they've just dropped below that minimum salary threshold. And in California, as of January 1st, the minimum salary threshold, if you have 26 or more employees, is $54,080. If you have 25 employees or less, it's $49,920. So just keep that in mind if you're having to reduce the salaries of your employees. They may fall under that threshold, even if they're still continuing to do exempt work. Once they fall under that threshold, the best practice is really to convert it to hourly, and then keep track of breaks and lunches and pay overtime.
Wow. Do you have any tools, Cindy, that maybe you could recommend to some of our audience, like how they keep track?
Yeah, definitely. I mean, it doesn't need to be anything fancy. It can be a simple Excel spreadsheet. This is the date, this is the time that they started, this is their first break, this is their lunch break, and this is their next break, and then this is the time they clocked out. And it can be as simple as an Excel spreadsheet where they turn into the employer once a week, or it could be an email, although that tends to get pretty messy sometimes, but at least it's some sort of record, because at the end of the day, what we're worried about is that there are going to be no records, and that your employee is going to come back and say, oh, I've worked 24 hours a day for you for the last, 6 months, ever since this started, or for the last 3 months, and we're not going to have any records. And in employment law, Amanda, do you know the top 3 rules? Document, document, and document.
Yes.
So that's just something we're recommending.
Okay, great. And I know at our own agency, we use a platform called Toggle. That's Toggl. We don't endorse for them. It just happened to be one we use. It's pretty easy. We run the reports. Yeah, so for anybody that's also looking for other platforms. So this one comes up a lot, Cindy. I think after the stay-at-home mandate is lifted, or even right now, some, essential workers, I know some restaurants are testing their employees before they go into work. Are we allowed to do that?
So historically, the answer is a clear no, right? Like if you take someone's temperature, that is considered a medical examination and absolutely should not be done. Now, in the wake of COVID-19, the EEOC has come out and said that due to the pandemic, you are able to do this. We, however, still are not recommending it for our clients because we still think that it's a medical examination and it needs to be done professionally. But that's not to say you can't do it. If anything, if you're gun-ho about taking your employees' temperatures before they start work every day, you can provide thermometers and have them throw it away, and have them take their own temperature in order to report to work. But it's still starting to kind of get into that gray area.
Yeah.
In fact, I was just on a webinar the other day where another employment attorney recommended for restaurants specifically to take the temperature of the patrons. And that is not something we would recommend. I thought it was kind of crazy idea, but I think we're just going to see a lot of litigation, Amanda, over the next year for this. Because what if somebody tests positive for a fever, you're not going to feed them, and then you're looking at a medical discrimination case, right? So it's just scary, and a lot is unknown right now. But that's the advice we're giving today, and that could change tomorrow.
Okay.
These
Great.
laws are changing all the time.
Well, we'll make sure to have another webinar so you can keep us posted.
Yeah.
Another question we have for you is, what do we do if someone tests positive for COVID in the workplace? And I actually know a few of our, a few businesses, this has happened to them, and I feel like they're reacting. So for those of us that haven't had this happen, knock on wood, what should we be doing, and how can we, proactively prepare for something like this?
Right. Well, it's a twofold question, right? So if somebody is diagnosed with COVID-19 in your workplace, you obviously need to send them home immediately or have them stay at home, right? Like, don't have them report to work because of the highly contagious nature. You need to clean their area very, very well, and the CDC has specific recommendations for that. You also, though, need to tell anyone who's come in contact with them, whether it be other staff members or clients of yours, that somebody was diagnosed with COVID-19 in the workplace. You do not want to identify the person by name, but you do want to say that, someone's been diagnosed. And if somebody is not yet diagnosed, but has the symptoms and has the fever and has the cough and everything related to COVID, you want to send them home. And maybe they haven't yet gotten a positive result, but you also want to tell anyone that they've come into contact with that you are sending someone home out of abundance of caution. You don't want to identify the person by name, but that you're just acting in an abundance of caution to protect, your clients and your employees. So, got it. And then to your second part of your question of what can you do preventatively in order to hopefully keep COVID-19 from coming into your workplace, we have outlined an entire action plan. It's several pages. If anyone wants it, you can certainly email me. My email address is Cindy, just CINDY, and then at thehecklerflynnlaw.com website that's on the screen right now. But if you are an essential business continuing to operate, or once we get back into operation, you want to provide maybe protective gear to your employees, such as face masks, right? Gloves, things like that. you want to have an outline plan of where your employees can go to if they are feeling sick, like a very clear, this is the one person who you reach out to if you're not feeling well, or this is the person who you contact in the event that you see someone, exhibiting objectively any symptom of COVID-19. So, and then it's all about education, right? Educating your employees and having signs up that say, like, these are the current symptoms of COVID-19. And if you're experiencing any of them, please, contact us immediately and go home.
And then, so once they go home, do they just, go get tested? What's kind of like the step after that we as employers should advise, or should we not even advise? And we should just tell them, we'll see you in 14 days, or, like, how do we know they're safe to come back? Am I supposed to see a doctor's note?
Yeah, exactly. That's exactly what you need. And so if someone does test positive, they need a doctor's note to return to work, and you can certainly require that. And then if someone is exhibiting symptoms, you can also require a doctor's note for them to be able to come back. So you can absolutely do that. And part of the reasoning behind it is because you have an obligation to your other employees to keep them safe as well. And then another question, Amanda, that we're often getting right now is whether or not an employee can refuse to come to work if they're an essential business and if they're open right now. And the answer is no. An employee cannot refuse to come to work unless there is an immediate danger of COVID-19 in the workplace, such as they see that, the business is not taking this seriously, that people are being coughed on, that things like that create that imminent, immediate danger and fear. And that is the only time an employee can actually refuse to come to work, assuming work is available for them and, the business is open.
Okay. Can you kind of talk about the program that's out there? I think for some employees, looking at the unemployment rate, it's so high right now, right? So for some employees, they may not want to, even if they feel sick, they just, not like they pretend to be healthy, but maybe they just want to tough it out. But of course, that's not beneficial for the entire company. So how can we advise them, like, if you're not feeling well, please go home. And, there are programs out there that could help you, so they don't think like they're just going to be out of work or get fired,
Right. Well, under the stimulus plan that went into effect in March, it gives opportunities to small businesses under FFCRA, the Families First Coronavirus Response Act, to be able to give their employees emergency paid sick leave or the extension of FMLA. And so if you have an employee who's exhibiting signs or symptoms, and they do have that doctor's note, you get a tax credit as a business owner, 100% of their pay. And so what that looks like is, talk to your payroll companies. Hopefully you have a very good relationship with them. And if it's documented correctly on the paycheck stub, you will see your employee payroll come out of your account. And then typically they do another pull on your account for taxes, and you will see a credit of however much was paid to that employee under FFCRA reimbursed to you. So that's good news. And then Amanda, I see a question here about doctor's notes from one of our participants. And so just to answer that, and I'll read the question out loud. We have heard that doctor's notes should not be required because it puts undue stress on the doctor's offices. They recommended a regular quarantine period and being symptom-free for 3 days after having signs of COVID-19. So the first part of your question about the doctor's note should not be required. As a business owner, you are absolutely able to require it. And now a lot has changed with the testing. There are services where you can get tested within 24 hours. When it first came out, it took 5 or 7 days for your results to come in. So a lot has been continuing to change as the government gets up and running with all these new test centers coming up. But as an employer, you can require a doctor's note, and I would recommend you do so just in the event you are audited, right? So under the FFCRA, I talked about those 2 separate sick programs for leave, the the Emergency Paid Sick Leave Act or the extended FMLA. And I recommend keeping that as part of your employee's personnel file, or medical records should actually be kept separate from the personnel file, but at least documenting it and making sure they have it. And then also with regard to, I'm not sure who they recommended a regular quarantine period. I'm not sure who recommended that, but you know, the quarantine period can be up to 14 days. And so by having, which comes up often, you know, by having an employee basically stay home from work for 14 days, I mean, that can put a lot of stress on the employee as potentially not being paid. So definitely look under the FFCRA to see which program, you know, your employee would qualify for.
Yeah. And I actually spoke to a few of my doctor's friends. You know, I think right now everybody just kind of they don't want to call overreacting, but they definitely, any symptom, right? If they're like coughing, they're like, oh my God, do I have COVID-19? Or, you know, I have, my temperature is a little bit high. Do I have COVID-19? And sometimes they don't have all the symptoms, right? But then, so they're getting all these calls. But if someone were maybe just coughing a little bit or feeling a little bit unwell, and then we send them home, but next day they feel better because maybe it's just nothing, or sometimes allergies, and they want to work from home, is that allowed? Or should they just not work?
So anyone working from home, I mean, there's no immediate or imminent threat to others in the office or in the workplace, right? And so under the FFCRA, you can certainly have someone take intermittent leave if they're showing signs or symptoms. It would just be up to the agreement between the employee and the employer. So as long as the employer allows it, I mean, certainly you can take it intermittently. Yeah.
Okay, great. And Cindy actually has really organized. I think you mentioned you have handouts that you could share with the audience here.
Yes, absolutely. If anyone wants to email me, you know, my email address is cindy@hacklerflynnlaw.com. I'm happy to send our coronavirus response plan to you. And then just, you know, because we practice employment law, I also have a kind of an employment checklist if anyone wants that as well, where, you know, you want to make sure you have things in place to protect the business. And then if anyone also wants to get on our mailing list, you can just shoot me an email as well. I promise I will not spam anyone, but I think it's important to keep our clients and our friends up to date with everything that's going on. I mean, just 2 weeks ago, the Department of Labor issued new guidelines. And so we pumped that out to ensure that everyone had the new posters printed or hung or actually virtually sent out. I'm like, send it out via email. That's all you need. Yes, my email address is Cindy, CINDY, @hacklerflynnlaw.com. So
perfect. And we'll share all the panelists' contact as well when we send out the email. So in case anybody doesn't capture that. Great. So, you know, and I could attest to it. I get Cindy's e-blasts. They definitely are not spam. I do look at every single one of them. I think for here as business owner, you know, what Cindy's here to help us with is be proactive, right? So we want to prevent it, and that's what they do very well, that prevention. But of course, if it gets to it, you guys could contact Cindy. But all the information, she said her handout's really good. I just got one, I think this week. You know, so I'm like I always print it out and then make sure I'm doing everything. So thank you, Cindy. You know, some of the tips I heard from Cindy today is document, document, document. I feel like she says that to us all the time when we see her. Secondly, can we take employees' temperature? The answer is no, but they could take their own and advise them, like, you know, everybody being cautious of that. So thank you so much, Cindy. And then we'll have opportunity for more Q&A. So get your question. You guys could put it in the Q&A button. Thank you, Cindy.
Thank you, Amanda. Always a pleasure.
Yeah. Now we're going to shift to Sherry Wallen. And then some of the stuff that Cindy touched upon is actually great. You know, so a lot of times I talk to Cindy, and afterwards I was like, okay, now how does that impact us as a company financially? Sherry actually is a founder of Strategic Direction. She has more than 2 decades of experience, even though she looks so young. She provides business advice services as well as accounting, auditing, taxation services for small and middle market companies. Sherry uses her unique combination of skills to advise her client and strategic business decision, in addition to preparation of timely and accurate tax returns, financial projections and financial statements, audits, and reviews. Her clients are in a number of industries, including service industry, apparel, manufacturing, retail, distribution, and professional services. Prior to practicing public accounting, she worked in the accounting department of Gold Line International, and she actually also spent 2 years in Seoul teaching. That was something new I learned about her. She earned her bachelor degrees in science, in business administration with a concentration in accounting. She was previously on the board of NABO as well, and we're just so glad to have her here today.
Thank you, Amanda. I'm pleased to be here.
Great. So I'm going to go jump right in. I know I personally was previously on so many of those SBA calls and just trying to learn about all the different loans and tax credit out there. How should we use tax credit rather than PPP or EIDL loans?
Well, right now, if you weren't one of the lucky ones, you didn't get the PPP loan. And now those of us who applied are now in line hoping that the next round will get the PPP loan. So you might not have the money to pay your payroll and you want to keep your employees paid. The other thing to do with the EIDL loan, that's a nice thing, but you have to apply for it. You have to be able to show that you had economic issues, that you lost working capital in order to get that loan. In the short term, what you can do is if you're an employer and you want to pay your employees, you can now defer paying your Social Security taxes, the employer portion of the Social Security taxes. And you can do this for the entire 2020. And then you only have to pay 50% by December 31, 2021, and the other 50% a year later, December 31, 22. Now, Social Security taxes may not be a lot, but it's going to help put money into your pocket today that you can keep paying your employees with. Now, the other option you can do is if you look at your revenues for Q1 and compare it to a year ago, if your gross revenues are down 50%, now you get additional credits for your employer payroll taxes, federal only, that you can take against your federal taxes. Basically, what you're doing is you're going to pay your employees, and you can pay them up to $10,000 with this credit, and it includes some health insurance benefits as well. Then you calculate your tax credit by 50% of the wages that you pay. So what that equates to is during 2020, you can take a credit up to $5,000 against your employer payroll taxes for each employee. And so that's going to put money in your pocket today so that you can pay your employees. Now, if you get the PPP loan, you can't take this deferred, these credits, the tax credits against your payroll taxes or defer paying your Social Security taxes. So that's the thing. Right now, you have to look and think, do I have a chance of getting the PPP loan? If you don't think so, go ahead and take the credits if you have the money to pay your employees.
But what I'm hearing is you can only do one. You can't do both.
Right, because the PPP loan gets forgiven, and that's for an 8-week period. If you take the tax credit, let's say your revenues are down 50% or more, then you can take a credit up to $5,000 per employee. It really depends upon what's going to be best for you. I've run the numbers. It really depends upon your situation and if you have the cash to do it. The PPP loan is really nice, gives you quite a bit of money that can be forgiven, but it can be difficult to get.
And what through all the SBA webinars and all the other ones I've been on, previously PPP loan and EIDL, you can also only apply for one, but then as it evolved, now you actually apply for both. And we actually heard from some business owners, they actually got the PPP and then others got the EIDL. So it just, again, depends, right? And
Depends. You just can't use the money for the same things. So the EIDL can be used to pay for your rent and operating expenses, of course, not to refinance debt, but to keep you going through this crisis and pay your expenses, whereas the PPP loan is for your payroll, basically, and a few other small items. So yeah, you can do both. You just can't use them for the same expenses.
And is it correct that PPP, you have to use at least 75%? That's a percentage towards payroll, and then 25% towards like rent and utilities, et cetera?
Correct. So yeah, you need to make sure that you are paying salaries that equate to at least 75% in your 8-week period, starting once you get the money. It needs to be salaries and basically the employer portion of health insurance to qualify for forgiveness. And you're going to have to be able to document that. And I've read some things where if you're having trouble using all your money, you can give raises to people. I've seen that. I didn't see that from the SBA themselves, but I have read that. I would just be careful.
Okay, great. And then during this uncertain time, I know, it's been really hard on a lot of business, even ourselves as an event industry, hospitality, travel, restaurants. A lot of people they're basically having a business loss, right? So if they have a business loss, how quickly can they benefit from that? I think it's ironic we're saying it that way, but how can we benefit from that? Can you kind of teach us some ways?
You can.
Yeah.
What happened is back in 2008, with all the new tax rules, they took away from the IRS only, they took away carrying back your NOLs, net operating losses, and said now you can only carry it forward indefinitely, but you can only use it up to 80% of your taxable income. Well, after they issued the CARES Act in late March, now for 2018, 2019, and 2020, you can now carry your operating losses back 5 years.
Wow.
So in the previous past 5 years, if you've had income and 18, 19, or 20, you had a loss, now you can carry it back and you can get your taxes back.
That's awesome. Thank you.
That puts money in your pocket today for 18 and 19 if you filed 19. And of course, we're going to have to wait a while in 2020.
Got it. Okay. And then what if we need to borrow money from, retirement plan? I know some business owners were talking about that. They're just not cash flow healthy. They need money. They didn't get their PPP loan or EIDL, and tax credit is like way later. So can we tap into our retirement plan? Is there,
You can.
usually there's a penalty.
There's usually a penalty. Usually what happens is when you take an early distribution from your retirement plan before you're 59 and a half, what you get hit with is a 10% penalty and a 2% for California penalty for early withdrawal. And you also have to pay income tax, ordinary income tax on all of that money. Unless, of course, you're taking money from a Roth IRA, and that's completely different. But let's just say you're taking money out of a contribution that you made pre-tax. Well, now you're not only paying income taxes, you're also paying your penalty. And that's a lot of money. And they're withholding at least 20% for federal taxes on your distributions. With the CARES Act, now they said, all right, we're going to help you out here. Now you can take up to $100,000 out of your retirement plan, and you're not going to have to pay the penalty. And California agreed, and they're not going to charge a penalty either. So that's wonderful news. But the really nice thing about this is you now have 3 years to do two things. One, you have 3 years to pay this money back to your retirement plan if you want to. Or two, you have 3 years to spread out the tax payments. So if you're going to if you're going to keep the money and not pay it back, you can now accept in 2020, you're going to pay taxes on only a third of it, and then 2021 and 2022. This way you can spread out the tax payments and you're still going to avoid those penalties. But if at the end of 3 years, if you pay back all of the money you borrowed, now you don't owe any taxes.
That's great. Okay. I'm writing that down myself. And then if I owe taxes, but I don't have money to pay for them, what do I do?
This is really challenging right now because the IRS is basically not open, not operating. Yes, they are attempting to issue us all checks on the stimulus bill, and they're doing very little else. So basically, if you need to be on a payment plan, you can go to the irs.gov website and set up an account. And let's say you owe less than $50,000 and you want to get on a long-term over 120 months payment plan. You can probably do that online through their website. If you want to do a short-term plan, which is 120 months or less, you can also do it if you owe up to $100,000 in taxes. If you owe more than $50,000 and you need a long-term plan, basically you're just going to have to wait until they open up, and nothing's going to open up until July 15th. And even then, you can imagine how inundated they're going to be with phone calls and questions. And so basically the good news is right now, you might be able to get on a payment plan if you owe taxes for 17 or 18 online. And you can also do the same thing for California. They're not going to be doing any collections or levies until July 15th, except in very rare cases. That's if you're a very high paying taxpayer and you haven't been filing taxes. They might be going after those people, but that's about it. The rest of us have a little break in the collection efforts. That being said, if you haven't filed your taxes or if you owe, now is a good time to get your accounts open, figure out how much you owe, and be ready to get on a payment plan when things open up. And if you already are on a payment plan and you don't have the money to make your payments, you can no longer call the IRS and have them suspend your tax payment. So what you have to do is you have to call your bank and tell your bank that you need a deferral on your payment plan. You're not going to get into trouble with the IRS, but you do have to proactively call your bank and put the hold on that.
Oh, so your bank could help you with that.
The bank can help you with that. Now, if you owe money for 2019 and you haven't filed your taxes yet, there are the forms that you file with your tax return to put yourself on the payment plan for 2019. So 2019 will be a little easier to deal with than previous years.
Okay, but at least now we have a little bit more time, because originally tax return was due April 15, but now we have until July 15.
Yes, that was a big relief for taxpayers and preparers across the board. It was a very intense time for all of us trying to meet that deadline. So that's a big relief. And it's not only filing, it's also paying your taxes. So if you owe money for 2019, you don't have to pay it until July 15th. If you need to make estimated tax payments for 2020, you don't have to make them until July 15th. You can make them ahead of time if you have the money, but you don't have to. But that could be a big amount of money you owe on July 15th if you put it off.
And does it have an impact? Like, if for those people that didn't submit their tax return, does that mean they get their stimulus check later?
It could. Not necessarily later because you didn't file your tax return, but later in that, for example, if you filed your 2018 tax return and earlier, but you never got a refund, maybe you had an overpayment, but you applied it to your next year's taxes, the IRS doesn't have your bank information. And if you owe taxes and you had them take it directly from your bank account, they will not use that information to give you your stimulus. So yes, it could take longer because you're probably going to get a check. And now the IRS has to take the extra time to go back and look over everyone's 18 or 19 tax return and issue a check. You can go online at Where's My Money Where's My Money, something like that, on the IRS website. Some people get information there and some people don't. Some people are allowed to give updated bank information, some people aren't. So if you run into roadblocks, just know that it is going to come. And if you didn't qualify in 18 or 19, I'm hearing that when you file your 2020 taxes and you didn't get a stimulus check, you are going to be able to take a credit on your 2020 tax return. So there are options, and it's very frustrating, and I understand it. The IRS is doing the best they can at the moment with people working remotely and trying to stay healthy.
Great. I know for a lot of business during this time, they're really suffering. However, there are business out there that are thriving and doing really well. So
Yes.
they have plenty of cash. I mean, how is there any way they could leverage their cash to help others and get a tax deduction?
Yeah, so if you are a business owner and maybe you have a flow through entity like an S Corp or a partnership, you can make charitable donations and those can flow through to your individual tax return, or you can take a distribution or extra salary and make the contributions yourself. And you can take up to $300. That's not a lot, but it's something on your tax return without itemizing. Itemizing is Schedule A. That's where you put your property tax payments, your state income taxes, your mortgage interest, your charitable donations. So $300 if you don't itemize. If you itemize and you give away quite a bit of money to help during this period, you're allowed to take up to 100% of your adjusted gross income. That's the amount of donation deduction you can get. So pretty much you can wipe out your taxable income if you want to be very generous this year. It's a nice way to give back, and you also get a little benefit as well.
Oh, that's great. Sorry, can you just repeat? So do you do it through your company or through your personal?
You can do it either way, but I really recommend that you do it individually if you're a flow through entity, because that charitable donation does impact your 20% deduction calculation when you're taking that extra deduction for having a business on your individual tax return. So I really recommend take the money out in salary or take it out as a distribution and then pay it individually.
Got it. So for those of you that are doing really well and thriving, those are
And
some
there's
tips for
also one
you.
other thing you can do to help your employees. Employers can now pay student loan back for your employees. And if each person who receives this gift from their employer, they can exclude up to $5,250 from income. So if you pay your employees student loans up to $5,250, they don't have to pick that up as income. So now you've helped your employees with their student loans. You've basically given them a little extra money because now they don't have to pay this back in the future and they don't have to pick it up as income. It's a nice little gift for your employees if you have the cash, and you get the deduction.
Yeah. But that's like a complete, you pay off, not like you loan money to them to pay off.
You are paying this money against their student loans directly.
Got it. Oh, wow.
And Sherry, can I ask a question on that?
Yeah.
Now, can you say I only want to pay like certain employees student loans, or can you essentially discriminate against certain people or certain only the like C-level staff, or do you have to offer it to everybody? Do you know offhand?
I did not look that up specifically, but I think it's a very important question. And honestly, if I were going to do it, I would want to treat everybody the same, because that's going to get you in trouble, in my opinion. Not that I'm an attorney, but that does warrant some additional research if you're going to use this as an option to use some of your cash and help people.
Yeah, because that makes a big difference. I mean, Cindy, I feel like you bring up a good point, because maybe you have enough funding to support, I don't know, 10 employees reimbursement for loans, but maybe not 100 of your employees. Right.
But then that just means that maybe they don't get up to the full dollar amount. Maybe you pay less, because you don't have to pay that full amount.
Yeah. So maybe be fair, like what Cindy was saying in the beginning of our webinar, don't discriminate, right? You can't say, oh, you're in this threshold or only C-level, I'm going to reimburse you, but rather maybe 20% loan payment for everybody as a whole.
On the other hand, what happens if someone's sitting there going, well, I already paid off all of my student loans. What do I get? I don't have the answer for that, but that's also an interesting question.
You get gift cards.
Well, those student loan people might want the gift card instead.
Yes. Okay. Great. Well, so some of the key takeaway I hear from Sherry, thank you so much, is that for retirement plan, for those of you that need money, you can actually tap into that. You could take up to $100K with no penalty with 3 years to pay that back. For those of you that have a little bit extra cash on hand and want to do some good, there's so many charities out there that are suffering. you know, that will disappear during this time. So this is a great time to make donation for them. Best to do it out of your individual versus the company. So thank you so much, Sherry. And now we're actually open up to Q&A. I know we have a lot of questions out there. We actually got some preliminary questions. So I'm just gonna open this up to the panel and you guys could both answer and chime in. One of the questions we got is unemployment for independent contractors. Why do some get it and others do not?
So I'm happy to start with anything that I know. So on EDD's website, there is a portion where you can do like your unemployment calculation. I would very much cautious you of doing that for your employees though, and telling them a specific amount, because anything, as we've seen, can change at any point. My understanding just in general is that in California, unemployment is now through 39 weeks, which is great. I mean, that's 9 months, that's having a baby. And if you get $1 from any state, you get an additional $600 from the federal government. And that might look, it might come in a couple different ways. One could be in a like separate check from the federal government. One can be directly, some clients are getting it directly put on their EDD cards. So it can vary a little bit. But specifically when it comes to independent contractors, and Amanda, if I may, you know, this is an area where I think that, you know, for 2 years now, I've been saying in every single webinar, like, you know, if you have independent contractors working for you, you need to probably change that. Because of Dynamex, it came down literally 2 years ago in April. So 2 years ago, Dynamex came out, and then, which is a California Supreme Court case. And then in January, AB5 came out, which is another California, you know, rule, a Senate bill. And if you have independent contractors working for you and they file for unemployment, you could be asking for an EDD audit. And so it's very important that when talking to them, that they say that they are self-employed, not an independent contractor. I think it's going to be a huge opening for EDD audits and potentially misclassification lawsuits in the future. And so it's going to depend on the exact nature of how that person is categorizing it. But I mean, anything can change, and I mean, EDD can essentially discriminate. So I don't know specifically why some independent contractors get it and others don't, but it's going to come down to most likely how they're classifying it with EDD.
Well, what I have seen for why some people get it and some people don't, occasionally an independent contractor will work for someone who pays them a W-2 wage. So for some people I've seen, they get a very, very tiny a bit of unemployment right now if they apply for unemployment, because maybe they had some W-2 wages they forgot about here and there. So I have seen that. For those people who have never had that, they get denied right now for unemployment because they're not allowed to, under California laws, to get unemployment. But with that new CARES Act, they gave the self-employed people the right to get unemployment. And so that application actually starts Tuesday, April 28th, where people can start applying if you're a sole proprietor, basically, and get unemployment. And the pay can be retroactive, but it's just taking the state a while to get the forms ready so that people can apply and figure out how to best navigate this new rule.
Great, thank you. We do have some questions as well. What is considered immediate danger for employees who refuse to work?
So I'll take this one to start as well. So OSHA specifically defines imminent danger to include any conditions or practices in any place of employment which are such that a danger exists which can reasonably be expected to cause death or serious physical harm immediately or before the imminence of such danger can be eliminated through the enforcement procedures. So there is a specific definition to immediate danger. and that is the only time an employee can refuse to come to work. There's specific guidance around that. And then as for hazard, there's unfortunately little guidance on whether or not COVID-19 constitutes a hazard under OSHA standards. I'd recommend employers follow all OSHA required standards and suggest following the ADT. It's the aerosol transmissible diseases standard, which is aimed at preventing worker illness from infectious diseases that can be transmitted by inhaling air that contains viruses, including COVID-19, bacteria, or other disease-causing organisms. So while the Cal OSHA ADT standard is the only mandatory standard for certain healthcare employers in California, it may provide useful guidance for protecting other workers potentially exposed to COVID-19. So
Got it.
I hope that helps. That's a long-winded way.
Jen in the audience is also asking, if an employee asks for hazard pay, what is your recommendation?
Yeah, so just on those same lines, there's little guidance right now on whether COVID-19 constitutes hazard under OSHA standards. So, I mean, your guess is probably as good as mine right now. And I'd probably have to do some research specifically, but yeah, right now it's just saying, there's little guidance on whether or not it's considered a hazard.
Okay, all right. We got another question. Is it a smart idea to take out the EIDL loans to have a safety net for funds due to long-term economic impact in this situation?
I can attempt to answer this. You can apply for the EIDL loan. Maybe you got lucky, you have a couple employees, so you got $2,000 or $3,000 out of the $10,000 they originally said would be in advance. But in order to get the actual full loan, you're going to have to show that you have been impacted economically for the COVID-19. So if you have indeed been impacted economically, then yes, go ahead and apply for the loan, and the SBA will grant loans based on economic need. If you don't have an economic need, but you think you might in the future, you should probably wait until that happens. We are going to be allowed to apply for this a lot longer through 2020. So the answer is, if you don't have an economic need right now, I don't think you should apply, just because you don't qualify and you might not get the loan. And it's a lot of work, actually. And you have to show some financial information in order to get the loan.
Okay. Do we have any idea when the next round of the SBA PPP will be open? I think a lot of people was asking about that because they didn't get through. The government ran out so fast,
Well, we're waiting for the money to get through Congress and the House and everything. Once that happens, from what I understand, we don't have to reapply for the PPP loan. We have our places saved in line, but what we don't know is how the banks prioritized everything. They did take some of this money, if it gets passed, which it probably will, and said that this bucket of money belongs to the smaller, more local banks, because that way people can get the money from the local banks as well as the big banks. But again, I believe it's going to go fast. The second round, if you've applied, you're in line, cross your fingers. If you haven't applied, get online and start applying, and let's see what happens.
Okay, great. We have another question from the audience. It says, if employee work during this crisis and down the line, the employee asks for compensation, is the employer required to pay the employee? Is there something for the employer to safeguard from that?
So if you have employees working during this crisis, you absolutely are required to pay them for their work during this time. If on the other hand, business slowed down and they're an hourly worker, you can certainly cut their hours and they can go on unemployment, in full or partial unemployment. But anyone working for you during this time absolutely needs to be paid. I'm not sure what's being asked about something to safeguard the employer, but yeah, anyone who's working for you needs to be paid. And if you want to drop someone's pay, you need to give them notice ahead of time.
So Cindy, I think maybe I can help refine this a little bit. So actually there's one business I know that really suffering. Their business went down 90%. So they absolutely have no income. And what the business owners that made a hard choice and decided to just be, transparent with their team, and their team actually, had their separate meeting, and it was a small company, but their team came back and said, you know what, we'll work for free for you during this time.
Oh, no.
No? That's not a good thing?
No. You are asking to be sued. Absolutely. Yeah. You need to have them all sign releases immediately. And you're going to be sued. 100% agree. I mean, there's just no way around it. Like, that's it. Like, you cannot have your employees work from free under any circumstances whatsoever. And you need to fix this immediately.
Okay, I better hurry. And after this webinar, I'm going to call that person and let them know. I know they're not on this listening in today, so I'll let them know. Okay.
Yes.
Yeah, but I think, I mean, he was so touched that his employee will do that, but.
That is so kind, but no, absolutely not. Absolutely not.
Okay, perfect.
No.
Great. We're going to wrap up this webinar. So Cindy and Sherry, do you guys have any last words you want to share with the audience here today?
No, I mean, thank you so much, Amanda. And Sherry, it's so good to be on a panel with you. I had so much fun. And if anyone has any questions, I'm always happy to do any follow-ups and see where we can help.
Yeah, I just want to thank you both again.
Thank you, Amanda. And again, if people have questions, they can reach out to me as well. I think my information was up earlier, but my email is sherry@sdicpa.com. And again, I'm happy to talk things over with people.
Perfect. We'll be sure to share both of the panelists' contact with you guys when we send out the link for the on-demand, because I know there are quite a few people that couldn't be on today, but they emailed us separately, said, can you please send us, are you guys recording this? And we said, yes, we are. Cindy Scott was one of them. So he was like, make sure you send it to me. I was like, okay, we will. So we do thank you again, Sherry and Cindy, for sharing with us. I know there's so many, all of us are adapting, evolving. Hope we come out this stronger and better. But your advice and tip is very helpful, and I'm sure I speak for everybody in the audience today. So thank you so much.
Thank you.
Have a good rest of the day, everybody. Bye.
Bye.